Have you ever wondered what separates the people who panic during a crash from the ones who come out even richer? Why do some people lose everything, while others seem to build fortunes from the same chaos? Because here's the truth. Every major crash in history has created more millionaires than most bull markets ever could. And the one coming in 2026 might be the biggest opportunity of your lifetime. The real question is, will you be ready to take advantage of it? Because most people won't be. Most people always do the same thing. They feel safe at the top. They ignore the warning signs. They believe the good times will continue just a little longer. And then, when the market finally breaks, they panic. They sell at the bottom. They call investing a scam. And they spend the next 10 years wondering why other people got richer from the exact same crash that destroyed them. That is the real difference. Preparation. Not intelligence, not luck, preparation. Right now, the warning signs are everywhere. Stocks are near record highs. AI companies are trading like failure is impossible. Housing is still priced like interest rates do not matter. Credit card debt is exploding. People are borrowing just to survive. And yet investors keep acting like everything is fine. This is what every late cycle market looks like. It always feels safest right before it breaks. Before the dot-com crash, people believed tech stocks could only go up. Before 2008, people believed housing prices could never fall nationwide. Before every major collapse, there is always a story explaining why this time is different. And every single time, the story ends the same way. Because bubbles do not die from fear, they die from math. Warren Buffett uses one simple measure to judge whether the market is dangerously overpriced: the total stock market compared to GDP. Right now, that number is sitting near levels that historically come before major crashes. The last 2 times it reached these extremes, the market did not gently correct. It broke. Then there is the Federal Reserve. Most people think the danger is high interest rates. It is not. The real danger usually begins when rates start getting cut. Because that is the moment the system admits weakness. That is when profits shrink, layoffs grow, credit tightens, and the illusion of safety disappears. Recessions usually begin after the cuts, not before. That is the part most people get wrong. Then look at housing. People are taking 7 and 8% mortgages to buy homes priced higher than the last housing bubble. That is not stability. That is delayed pain. And crypto follows the same cycle every time. Excitement, euphoria, collapse, recovery, repeat. Different asset, same human behavior. So yes, the crash is coming. Not because of fear, because cycles do not disappear. They repeat. But here is the part most people miss. A crash is not just destruction. It is transfer. Wealth moves during panic. From the emotional to the prepared, from weak hands to strong hands, from people who need comfort to people who planned for discomfort. That is where fortunes are made. When prices fall, great assets go on sale. The same companies people begged to buy at the top suddenly become available at a discount. The same real estate that looked impossible becomes negotiable. The same opportunities everyone wanted suddenly feel too scary to touch. That is where rich people buy. Not at the top, in the blood. And most people miss it for one simple reason. They have no cash. They spent everything during the good times. They bought too high. They borrowed too much. They confused confidence with strategy. It isn't. Cash feels boring during a bull market. During a crash, cash becomes power. Cash is not laziness. Cash is ammunition. That is why Buffett sits on massive cash reserves when everyone else is celebrating. He is not being passive. He is waiting. The greatest investors do not prepare during the crash. They prepare before it. That is your move now. Build dry powder. Reduce stupid debt. Make your buy list before panic starts. Know which companies, ETFs, sectors, or assets you would happily own if prices dropped 30 or 40%. Because when fear arrives, clear thinking disappears. You cannot build the strategy in the middle of a hurricane. You build it before the storm. And mindset matters most. During a crash, your brain will scream at you to run. The news will be terrifying. Your friends will say the market is finished. Your portfolio will bleed red. Everything will feel wrong. That is normal. But remember this, the market does not reward comfort. It rewards discipline. By the time things feel safe again, the opportunity is usually gone. That is how crashes work. They punish emotion and reward preparation. So when 2026 arrives, you will have two choices: panic with the crowd, or quietly buy what they are too afraid to hold. That is how you use a market crash to get rich. Not by predicting the exact day, not by gambling, by being ready before everyone else realizes they should have been. Because the crash itself will not make you rich. Preparation will.